Hello and welcome to our channel. My name is Will Cannon. My team and I help people to buy and sell apartment buildings in Baltimore. Thank you for tuning in with us today at Frederick Realty. I am here today to discuss different types of mortgages. The first mortgage I will discuss will be the conventional 30-year fixed-rate mortgage. The ownership of this type of loan is individual. In other words, you must take title in your own personal name. You cannot take title in the name of an LLC or other entity. This product applies to residential properties from 1 to 4 units. It does not apply to commercial properties, 5 units and up, or mixed-use properties. Your qualification for this type of loan will be based on your personal income, individual credit, and the income of the property. For an investor seeking this type of loan, 75% of gross rents are added to your personal qualifying income. The appraisal for this type of loan is based on comparable sales, as opposed to the income from the property. A conventional 30-year loan requires a down payment of 25% of the purchase price. There are lenders that offer different down payment amounts, 10 to 20%, but 25% is typically what we see. The term is a 30-year fixed product. The main advantage of this type of loan is that there is no interest rate risk. In a rising interest rate environment, such as today, this can be a real advantage. Because of the high hurdle with documentation, interest rates are normally the lowest you will see. The disadvantage of this type of loan: 1, the loan is only available for 1 to 4 units. 2, the amount of documentation you will have to provide. You will have to produce all your personal financial information. This can be time-consuming and a real pain, but also well worth it. The next type of loan I would like to discuss is called a hard money loan. The ownership of this type of loan is individual and/or an entity, LLC, etc. This product would apply to any property type. The qualifications for this loan are mostly based on the relationship with the lender. These are experienced lenders. A hard money loan down payment will depend on your relationship with the lender. The term of the hard money loans, are normally short, 6 months to a year. These loans are common in the rehab and flipping business. The advantages are that there is a low documentation hurdle. The lender can decide to lend in a few days and can close very quickly. If you are an investor, these types of loans are a good way to get to acquire a property, get the property stabilized, rehabbed, leased, and then go back to a bank and refinance into a lower rate product. The disadvantage of these loans is that you will pay higher interest rates and/or points, lender fees. The next type of loan I would like to discuss is a commercial loan. The ownership of this type of loan can be individual or in the name of an entity, LLC, limited partnership, etc. There is a wide variety of properties that qualify for a commercial loan. For our purposes, it would be properties with 5+ units, mixed-use properties, or industrial, land, etc. Commercial lenders look at your global asset picture when considering lending to you. They look at a combination of the income from a property and your personal income. A commercial loan requires less personal information than a 30-year fixed loan and is like a hard money loan, more lender-based. Advantage of a commercial loan include less documentation, loan based on a combination of income of the property and personal income. Once the commercial lender has your file and has established a relationship, they can reuse your file with small updates, making the next investment much easier to get into. This structure offers flexibility on property types and terms. Disadvantages of a commercial loan would be short interest rate term lock, normally 5 to 10 years, and normally higher interest rates. The next type of loan I'd like to discuss is an FHA 203B loan. The ownership for this type of loan is individual. The property type is 1 to 3 units and must be relatively turnkey. The underwriting criteria: this type of loan, like a conventional 30-year fixed loan, has a heavily scrutinized application process. Like a conventional 30-year fixed loan, the borrower can use 75% of the property's rents to help qualify. The down payment required for an FHA loan is 3.5%. The terms of the loan is 30-year fixed. The advantages of an FHA-B loan are a low down payment and no interest rate risk. This significantly lowers the barrier of entry compared to a 25% down payment on a conventional loan. Interest rates for an FHA guaranteed loans are normally lower than conventional mortgages. The disadvantages of an FHA-B loan include, like conventional 30-year fixed-rate loan, they have a heavily scrutinized application process. Only one FHA loan at a time. The lender can require repairs. You must live in the property. In my opinion, the FHA loan is one of the best ways to secure a solid financial future and a great way to build wealth. The general idea behind a FHA loan on a multifamily property, 1 to 4 units, would be to buy the property, live in one of the units, and have the other unit or units help pay your entire mortgage. This means that you can live in the property for free and at the same time be building equity and wealth by paying down your mortgage. Could there be a better deal? A few details about this loan product. 1, you must live in the property. 2, you must move into the property no more than 60 days post-closing. 3, you must live in the property for at least 7 months of the first year. With an FHA loan, you can ask the seller to cover 6% of the closing costs as opposed to 2% for a conventional mortgage. The last loan structure I would like to discuss is an FHA 203K loan. The FHA 203K loan is an FHA loan with a planned rehab. It has similar requirements as discussed previously with an FHA 203B loan. The ownership of this loan type is individual. The property type is 1 to 4 units with a planned rehab. The underwriting criteria involves extensive documentation, and you can use 75% of the property's rents along with your own credit and income to qualify for the loan. The down payment is 3.5%, same as a standard FHA loan. The term is 30 years fixed, and the rates are usually a little bit higher than an FHA 203B loan. The advantages to a FHA 203K loan: 1, low cost of entry; 2, can be used for a rehab; 3, no interest rate risk. The disadvantages of an FHA 203K loan: 1, very high documentation; 2, you must live in the property; 3, there are many steps required to close; 4, only a handful of lenders deal with FHA 203K loans. Thank you for tuning into this video on different types of mortgages. Be sure to like and subscribe to our channel. See you next time.